Hello and welcome back to the Bitcoin Cash podcast. This is episode 3 as we are following Bitcoin Cash on its rise to global adoption and being the global reserve currency eventually, I think anyway. Today I have with me Luke. How you doing, man?
Pretty good.
Surviving?
Pretty cold, pretty rainy today.
Typical London weather, right? Like that's
Yeah, basically.
well, life can be nice and depressing in London, but at least we can find some joy in cryptocurrency while we stay socially isolated, right?
At least January's nearly over.
Yeah, exactly. You gotta look on the bright side. Like I think this month has actually gone pretty quickly for me, to be honest. I think 2021 gave me some fresh optimism, and if it gets to like April or May and I'm still locked inside and just can't go anywhere, I'll be well sick of it, right? But for like the next month or two, I think I can stick it out as long as the cases are falling, the vaccines rolling out, right? So we'll get there eventually.
Yeah, I feel like we're kind of just holding on.
Yeah, it's a bit. Well,
It's like the
I've
last push
stopped
now.
checking the. Yeah, I've stopped checking the stats. Like I've become completely normalized to it that I just live in a box all day. But yeah, I think it'll be over. Like, and once it's over, it'll be over. Like before we know it, kind of thing. I think it'll all come together like suddenly, because it'll take people longer to get back into the vibe of like, oh wait, we can go out. Then, even once it's already safe, right? I think people will still be kind of hesitant. But yeah, anyway, so this episode, we've got the topics here. So we're going to have a quick little look at the headlines and then crack on with some Q&A and get into your story with crypto and all that. So, here we go. So yeah, quick stats update. So I checked the price about half an hour ago, $407 Bitcoin Cash. Today is 30th of January 2021. And the headlines is basically, so we had the GameStop on the last episode. So Friday evening that closed at $325. So there was a lot of hype on Wall Street bets that on Monday the shorts are going to start closing and it's going to go to the moon and they're going to bankrupt the hedge fund. So there's potential for that there.
I do have some questions about that. I think we'll do that after the Bitcoin stuff.
All right, cool. And just the one other thing I wanted to sort of mention. I mean, I recorded the last episode a couple of days ago, but yeah, so Elon Musk put Bitcoin in his Twitter profile, which caused a bit of a stir and immediately kicked the price up like about $5,000 from 32 to 37 or something like that, which I thought was pretty interesting. I mean, he's a guy that I would expect to be into it. I don't know how much he's been into it in the past or how much he's really looked into it or whatever, but I can see him throwing a couple billion in there, if he hasn't.
He started off with PayPal, didn't
he? Yeah, he literally
he seems the kind of person who'd be against it. He's the kind of financial institution that it sounds like Bitcoin would be kind of ruining.
Yeah, I mean, maybe. Like, I sort of think of it as more as like, he's the kind of guy, he's big on technology and innovation and all that sort of stuff. So I sort of see it from that angle. But it is true that he was like one of the founders of PayPal. But I think when he founded PayPal and everything, he kind of had the same vision that Bitcoin had, right? He just didn't know how to do it. I mean, there's like Bitcoin is not the first attempt that people have made to make an online payment system, right? There was some in the 90s. There was one called I can't remember what it was, but there was a guy who made one called like Liberty Gold or something like that. It was some kind of company that was basically the predecessor to PayPal, but he got shut down at a certain point by the feds because once they were like, wait a second, you're running your own currency, like we can't have that happening. And so then they had PayPal, which ended up being more like sort of a bank intermediary, kind of plugging into the existing system. And then in 2008, Bitcoin was invented. Satoshi, right, the inventor of Bitcoin, was obviously very keenly aware that if the feds realized, what was going on or like what this currency was, that they would come and try and shut it down, right? So that's, yeah.
Oh, that makes a lot of sense. That's kind of why he stayed anonymous.
Yeah. Like obviously, and it's, it's hard to say, right, in hindsight, like whether the whole being anonymous thing, I think, I'm sure it came from an abundance of caution, right? Like if you were the kind of person who knew this much about cryptography and about the history of money and about the feds, shutting down other people who tried to start their own currencies and everything like that, you would definitely like play it safe. But it was quite visionary. One of the hundreds of things that Satoshi did that is insanely like prescient was to just from the start be so strict about all that, and it never got followed up, right? Like you can imagine it sort of being like somebody starting this kind of thing and then like it starts blowing up and they think, oh shit, like maybe it's better if I'm out of the spotlight, but by then it's too late, right? So it was actually insanely prescient to be out of the spotlight. But yeah, so as far as like Elon Musk goes, I think he was sort of in that lineage of like trying to create an online payment system, and I'm not surprised if he comes around to it, and I imagine definitely would have bought up a bit himself and then just starts hyping it up, But it was interesting that he's put here Bitcoin, and that he hasn't either doesn't know or he hasn't looked into it enough or whatever to figure out, Bitcoin Cash rather than Bitcoin, or
Well, he's got 43.7 million followers, and I don't know, until we were speaking 2 days ago, I didn't really see a difference. Like all cryptocurrency is just Bitcoin to anyone who doesn't know anything about it. So I don't think this is him hyping up Bitcoin specifically. This is him hyping up crypto in general.
Yeah, I agree with that.
Using terms that he thinks people will understand.
Yeah. And I mean, and it is very like on trend, of course, right? With all the GME kind of thing, and it's funny how all these like politicians and different people coming out of the woodwork and be like, yeah, fuck the banks, and it's pretty much like everybody's on that train of fuck the banks, whether or not they are actually being benefited by the current system. It's still just like such easy points on the internet to be like, oh no, the banks are out to get us, the hedge funds, like
the
even
banks are
really
evil, and I love cats.
Yeah, even the people who are like in Wall Street are like, yeah, no, I'm one of the good guys though. Fuck the banks. It's like, all right. But crypto's been pretty OG. Fuck the banks for more than a decade now. So I think it is getting a huge like wash over of like support, right? In terms of like Dogecoin just went ballistic, and I've seen like on the Reddit and stuff, like the subscriber numbers are like rocketing up at the moment just because there's such a groundswell of everyone being like, wait a second, people don't question these things, right? Until there's sort of a need. So yeah, that's basically it, right? The rest of this episode for the listeners is basically that yesterday or the day before, I guess, I was talking to Luke a little bit about Bitcoin and about cryptocurrency and everything, and he had a bunch of questions because he's totally new to it, and I said, look, this is the whole point of me having this podcast, right? Like, why don't you just jump on with me and just ask me all these questions? I'll just answer them off the top of my head, and we'll just see where the discussion goes. And yeah, I think that'd be good for anybody else who's similarly new to crypto, and maybe in light of GameStop is doing the same thing. So yeah, break it down for me, man. Like what specifically piqued your interest, or how did you come to it?
Well, I kind of having you be kind of quite so evangelical about it.
Not until recently, by the way, though, right? I had never mentioned it until about like, we've known each other for what, like more than a year, but I'd never mentioned it till about 1 week ago, right?
Yeah, no, this is pretty much the first time that you've maybe you've been guiding me in that direction without me realizing, but this is the first time we've actually spoken about crypto or anything like that. But yeah, basically I was watching your first episode, and I kind of just went through it kind of with a fine-tooth comb, just asking anything that I didn't really understand, and it's kind of split into a couple of main categories. Really, basically, well, the first thing is I don't really get how it can work. How can it even split? How could you have a fork of Bitcoin? And more so, you kind of see Bitcoin Cash as the main fork, but I don't really get how that could be if it's split off from Bitcoin Core.
Yeah. Okay. All right. So the way the one of the best things to do on this topic is that on my website, for anybody who is looking this up, that I've put up here, I've got this video here. It's called 10 Years of Bitcoin, right? And this is this super good talk by this Australian guy where he talks about like all the history of Bitcoin and how like things came together. And he has a slide in here somewhere that I'm just going to quickly find where he has a diagram that I should probably, replicate or something, where he's talking about what exactly is the point of all these different like forks and how it all came together. Because once you can see if you can see it visually, it makes a lot more sense. Here we go. Let's just like see if I can. Okay, this is maybe not going to be the best. Like they didn't. They zoomed in on the slides here. Here we go. How chain split occurs. Here we go. Like this. All right. So here we go. Let me just resize the window a little bit. So that how do I get it in mini player?
Cinema mode.
Fuck. Oh no! Now I screwed it up. Cinema mode. Okay. All right. So if we just make this. Okay. Good enough. So basically, this is how it works, right? Is that in 2009, here you go, he's got 9th of January 2009, the Bitcoin network was started, and all the Bitcoin network does is it creates a history of transactions, right? Separated into, oh my goodness, I clicked on that accidentally. Separated into blocks, right? Which are a bundle of transactions. And so as each separate block of transactions gets kind of aggregated and packaged up together to confirm into the blockchain, it gets added like one at a time, right? So that's what this kind of process is. And that went on and on and on until, until the time of the split, right? And the key point is that it comes down to that because there is nobody in charge of the network, anybody can just change the rules at any time on their computer, right? So if I'm running a Bitcoin node and I think, you know what, great, I should just, change the software and just say I'm going to pay half of all the Bitcoin in existence to myself. And I can just change the rules to that and just off I go, right? But that's not going to work because everybody else on the network, their incentive is to not allow that, right? If you change the rules, it doesn't really matter what you change them to yourself so much as you change them to something that everybody else agrees with. And so obviously it's not in anyone's incentive to let anybody else be cheating, because if they are cheating, that's to their, that's to the detriment of the majority of participants, any one person sort of trying to get a leg up on the network. So that same principle applies to all the rules in Bitcoin, because it's just software. You could change the rules to anything you wanted, right? But the important thing is that a majority of the network agrees with you. Because if they don't agree with you, then you submit a transaction, let's say, paying all the Bitcoin in existence to yourself, then the rest of the nodes are just going to reject it. And so you can carry on your fantasy chain if you want, but the main network is going to continue with its own path. So what the split came down to was a huge disagreement in the community, which is kind of bad or unfortunate that it got to such an extent that like lines were drawn in the sand, right? Because these things are not done lightly. Like if the community all discusses and they say, oh, okay, we want to change the rules in this way or that way, obviously people float the idea, it's discussed, there's a bit of back and forth, somebody puts in a suggestion, and generally you want it because you want to keep everyone on the same page at like a social or a political level as well as literally a technical level of the network. But since it is literally just based on what's called consensus, if things get to an absolute impasse, then the only option at a certain point, and this is effectively what the Bitcoin Cash crowd came to, was to just be like, fine, we're just going to change our rules because we think those should be the rules, and that's going to cause a divergence, because then at the point where we've all updated our rules at a certain time that we've all agreed to, then if we broadcast a transaction, your network is not going to recognize it as valid. And if your network is broadcasting transactions, our network won't recognize it as valid, right? So as you can see in the diagram, this is kind of how it goes, that it comes up. I think this was a little bit misleading. I wish he'd put the fade going the other way so you could see that it was like these blocks were shared. But basically it was, block, 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 block. And then there was a certain block height, which the Bitcoin Cash side had effectively agreed, this is when we're going to split off. And on that block, they all like switched over their software to their new set of rules. and then from that point it kind of split in two. So because this is the history of all transactions, what that means is when there's a split like this, everybody on the Bitcoin Cash and on the BTC, you know, they get an equal share, right? So it's like you effectively have like a free market vote, because if you, like, let's say me, for instance, at the time of the split, I had some Bitcoin that was on the original chain, and then after it splits, I had X amount of BCH and X amount of BTC. I had an equal amount, and so does everybody else who was on who had Bitcoin up until that point. And so then those two coins trade against each other on the market, and either, you know, people sell out of this one and they buy this one, or they, you know, sell out of this one and they buy this one, and the market itself can judge, okay, there's this rule set and this rule set, you know, have at it, like which one gains more traction and adoption and stuff over time.
So the fork kind of effectively doubled the number of coins that existed, but with two different categories, and then...
Yeah, well, that's right, exactly. So what you need to think is that it's like, let's say Bitcoin, and then there's all the other cryptocurrencies, right? Like Litecoin or Dogecoin or whatever. The difference with them is that they started from their own first block and started traveling along, right? Whereas this one, they were one and then they split into two. But at the time that they split, yeah, well then you know, in some sense, you could say that now there's 42 million Bitcoins, right? Because before there was 21 million, just 21 million, and here there's 21 million on this chain and 21 million on this chain. And so that's why there is a lot of animosity and arguing about which one is the real, you know, Bitcoin, is because one thing people on both sides agree is that it's pretty important that there's only 21 million. But then
But now there's 42 million of two different types of coin.
Well, there's 21 million of two types. Yeah, so they each only have 21 million. And then so I guess there is 42 million total. If you wanted to acquire all the Bitcoin and all the Bitcoin Cash, you would have to get 42 million, right? But the theory, I guess, or the supposition of people probably on both sides is that sooner or later one of the chains will kind of die out and lose support, and at that point only the people on the real, you know, Bitcoin will you know, continue having their coins, right? Or the other one, it will just get so little usage, or, you know, everyone will stop caring about it, right? And this is where, like, so you can see there's another slide that he's got in here somewhere, which is about how this kind of happened again. So,
But could there not be another fork at some point? Could it not split into another set of different types of Bitcoins and then split until there are just dozens of competing different types of coins, which would make Bitcoin Cash kind of have more of a competing market?
Yeah, well, that's what this is. I can't really see where he's got he put this whole slide up on as the one slide, but you can sort of see here basically that it was Bitcoin, it split into Bitcoin Cash and then BTC, and then BTC split into Bitcoin Gold and Bitcoin Diamond, kind of split off there, and then Bitcoin Cash also split into Bitcoin SV as well here. So it has been sort of forking off and splitting off in those ways, right? And this is both a good and a bad thing, I guess I would say, right? On one hand, the good thing about it is that it's a free market. So, you know, that's very true to the spirit of Bitcoin, is that something has to compete and survive on its own merits. You know, if somebody disagrees to such a vehement extent about any principle of the network, then they're free to just fork off and start their own network. And if they get enough support, that's great. If they don't, fork off, right? You know, you can just fork off, right? That's kind of you know, it's kind of nice how that is the way it works, right? Anybody, if you have a better idea than Bitcoin, well, you can start a competing cryptocurrency, or you can start a fork of Bitcoin, depending on how you feel like you want to do it, right? So it has to survive. It has to, you know, competition breeds excellence, kind of an idea. The downside is, of course, every time you go through a split like this, it's quite sort of traumatic on the currency, because even though technically it's, you know, it's becoming more accepted or known as a way of you know, things diverging, it splits the community, right? And this is what I mentioned in one of those other episodes about how the value of the coin is ultimately the value of the community. How many people are accepting it? How many people want to trade with it? You know, how many people are putting their time and energy into making programs and infrastructure and podcasts or whatever they're doing to support that coin. So you can adopt a strategy of hedging your bets where you just get some of all of them and say, okay, well, I don't know, or I don't have a strong opinion. Or you can have the strategy of, I like this one, I'm going with this. Yeah, exactly. And so one of the big parts about it is that, yeah, maybe at the time of the initial split between Bitcoin and Bitcoin Cash, some people didn't know, and so they just held both, because if you're in it earlier, then you get an equal share in that kind of split, and you can just literally just let it sit, and if one of them dies out, it dies out, and if one of them does it. But in general, people obviously, if they're using money, they're gonna tend to use one more, or the people they transact with are gonna say, look, give me this one, I'm not interested in that one, or whatever. So it should be, and in theory, it should be a compounding thing, like of these ones that we've talked about, right? So Bitcoin is obviously by far the biggest, this sort of BTC, and then Bitcoin Cash is the second biggest by a decent margin, and then Bitcoin SV has had some, like I think it's about $150 or something right now, and then these other ones, Bitcoin Gold and Bitcoin Diamond, like whoever forked off from them, they didn't get very much support, right? Nobody was like, great, Bitcoin Diamond. So they're basically dead and gone.
they're trying to do the thing that I saw as a potential kind of downside. Well, what if everyone just forks off? I can make all my own Bitcoins, and actually they tried that and no one really cares about them, so it didn't work.
Yeah, that's right. It's like starting your own social media platform or whatever. You can be like, screw Facebook, I'm going to have my own site, and then you can put up your own site. But if nobody joins you on that one, then it doesn't matter, who you're going to be communicating with, right? And money is exactly the same, right? Doesn't matter. It's unfortunate, but you can't really just start your own currency and just say, look, I'm going to have Jeremy dollars, and just create that. The government will be like, what are you doing? And come and arrest you, right? But if you took that away and you just said, I'm going to make Jeremy dollars, then there wouldn't actually be very much use, because nobody else would be like, great, give me Jeremy dollars in order to buy, a loaf of bread or a piece of artwork or something like that. So when the coin splits, you need to have a lot of things backing you up in order to do it, because you need a decent chunk of the people that are willing to go with you. You need some of the miners that got to back your network. You obviously need companies, so like cryptocurrency exchanges and stuff like that. Like when they originally split, some companies, they didn't have Bitcoin Cash for a little while because they were like, we think this is just going to die, we're not backing it, and they just didn't list it, and you couldn't trade with those companies until eventually it sort of proved its merit, that it had enough support that it became more important for them to support it than just leave it out, right? But originally, that at the exact time of the fork, not everyone was convinced, right? Probably some people still aren't convinced. Like, if you want to trade with me, for instance, give me Bitcoin Cash, I'm loving it. If you want to give me Bitcoin, I'm not really that interested. I mean, maybe I would accept it, but even if I did, all I would do is just accept it and then immediately sell it for Bitcoin Cash, because I just don't have any faith in the long-term prospect of what's going on there. So, yeah, you need the merchants, obviously, like shops that are accepting it. You need developers as well, like as your coin goes on and adds more features and stuff like that. If 90% of the developers who know about your coin and they know the code and everything like that, if they all think, screw it, like we're going with the other fork, then you might be up a creek without a paddle, right?
That's kind of something else I don't really get. What kind of features, or like, what can like contribute to the code even like add to it?
Yeah, so I mean, there's a lot of things, right? So I mean, in one sense, you don't want them adding too much, right? And that's really where the split again between Bitcoin and all the other cryptocurrencies kind of came from, right? Because Bitcoin has a certain features, and people thought, okay, we're going to use this for payments or whatever. And then something else like Ethereum, Vitalik Buterin, who's the founder of Ethereum, he thought, hey, wouldn't it be sick if we could have, autonomous programs that were automatically transferring around money and doing this, that, and the other, had all these grand ideas, and everybody was like, yeah, but that's a bit much, like that's a bit complicated for us. We're trying to do payments, basically. So he just started his own cryptocurrency, and he made it so that you can put in automated programs that automatically track the weather and then pay out to somebody on a certain date, or all kinds of like stuff, right? And every other cryptocurrency, a lot of them come from that, right? There was one like Monero, and which was based on the idea of somebody who was like, look, we need this to be more anonymous, so they were putting in more features for anonymity. And then there's some coins that, like Dogecoin, right? They literally were like, let's just create it and let's just make it a meme. That was the whole thing. So whatever they're adding to their coin, it's probably in service of making it a meme rather than actually making it a stable like platform for payments. So any
From what I can understand, sorry, the only features you really need are being able to pay someone, not have double payments, and that's basically it.
Yeah, well, that's right, exactly, and I agree with you. I think for the case of Bitcoin, and this is why the Bitcoin versus Bitcoin Cash conflict is quite important, I would say, is because one cryptocurrency is generally going to be exactly what you're saying, just the payment system. And then if there's a lot of other coins and they have a lot of other different stuff, you can trade into those coins if you want to get involved in those specific niche cases. But the big case, the killer app for cryptocurrency, in my mind, is definitely just that, paying A to B. That's it, as simple as that. And so that's what so that's what I think the Bitcoin developers, or maybe not so much, but the Bitcoin Cash developers, certainly, that's kind of what their focus is. So, but things that you need to fix, for instance, like they recently added this feature to Bitcoin Cash called Cash Fusion, which is where basically you can automatically put your coins into a pool and have them mixed around with someone else so that you all have increased financial privacy, right? So like that's one kind of example of things that you could add that maybe aren't way out there, like, oh, we're going to have autonomous taxis that are automatically communicating with each other and turning into some sort of AI that's transacting with itself and buying its own petrol, or nothing too crazy like that, but just simple stuff that at the base layer is important, right? But like financial privacy. But yeah, you're right that at the core level, you don't want to put too much into your network, really, because what you want to do is provide a framework that then other companies, if they want to add different things, they can do that, on top of it, right?
Yeah. So how come you? So I've heard you say quite a lot that you consider Bitcoin Cash to be the main Bitcoin.
Yeah, I don't know whether main is really the right word, but like it sort of comes down to this ideological split that there was, where I think because when somebody says Bitcoin to me, I think of it like this graph that we were looking before, where it goes along and it's all Bitcoin up until it splits, and then to me the sort of the heritage of Bitcoin passed through into Bitcoin Cash. But obviously for some people it's the opposite way around, where they think it was Bitcoin, and then the sort of heritage or the true legacy of the first ever cryptocurrency passed into BTC Core, which is, luckily for them, got to keep the main branding, right? But at the time of the split, it was contentious, so Bitcoin Cash went with Bitcoin Cash, and Bitcoin Core was actually, they got their ticker symbol changed from BTC to XBT on a lot of the exchanges. Like Kraken is one exchange that still has that, because at the time of the split, everybody was like, well, who's to say which one is Bitcoin? Like, you should basically both rebrand. And the way it worked out, Bitcoin Core ended up sort of sliding back in there and changing it back to be or more sort of on the main brand. But to me, and I guess a lot of other people who are from the early days, it's more sort of the idea that, well, Bitcoin Cash, well, we had to rebrand, but we are still sort of the main thing. And that split, it came about because there was so much disagreement about what was the future, basically, of Bitcoin. And the currency that I signed up for, and which a lot of other people signed up for and were very excited about, was this peer-to-peer electronic cash, which, like, it's in the first line of the white paper, and all those sort of reasons, right? And that's what I was excited about in 2013, 2014, when I was sending to people, look at this can change the world. We can use this instead of having $5 notes in your wallet. We can just have this and all that sort of stuff. And so when the split happened, that was still the vision that community had, and that's in some ways the rebranding is quite apt, because it does emphasize more that part of it. And then the other side of the fork, who originally to them it wasn't so much that they were against it being more a cash system. That's kind of come along as a rationalization. It was more that there was sort of technical arguments about the 1 megabyte block size limit, and being worried that if too much payment stuff started happening on their coin, then it would reduce the ability for people to run nodes, and then if you had less nodes, it would be more easy to control, or for some outside force to come in. They had this sort of an angle to it. I'm not going to do a very good job of explaining it, because to me it's mostly nonsense. But basically, they had that opinion at the time, and then since then, because Bitcoin Cash has still had quite a strong vision for what it's going to do, Bitcoin has needed to contrast, and so the supporters of it have had more of the idea that it would be like digital gold, that it would be a store of value, and that it would be like in some world where you locked up your Bitcoin for 20 years and it was fine, but then you used some other coin for your day-to-day spending, right? Just sort of putting gold in a vault.
But that's not what it was. That's not what it was made for.
No, I'm glad you can see that, right? But I'm sure at some point you'll talk to someone, or you'll read some comment on the internet, and somebody will say, "No, that's what it was. It was digital gold the whole time," and you just think that's lunacy to me. But obviously, some people, they were there, 2013. They signed up for whatever they signed up for, and that's the way they want to run it, right? And so the coins they trade against each other on the open market, and to date, Bitcoin Cash has had the worst end of it. At the time of the split, I predicted and I expected that pretty quickly everybody would snowball onto the Bitcoin Cash side, but that's not what happened. Instead, what happened was most people stuck with Bitcoin, or at least most of the market cap stuck with Bitcoin. And I think what I overestimated at the time was the idea that this what I overestimated was how switched on people would be to this problems coming up in the future. So now, if we have a look here on Transaction Street, let me just refresh that. But this kind of situation where Bitcoin now has so many backlog transactions, and the fees have gone up to $8 a transaction, right? Instead of like 1 cent. My internet's kind of lagging out here.
That's a tenth of a cent.
Yeah, exactly. A tenth of a cent or less. And Bitcoin is this $8 fees. At the time of the fork, I thought, well, obviously this is what's going to happen if you cap the amount of transactions like that. But the people who supported it, I guess they weren't too worried about that. And now, or at least at the time of the fork, even right after the fork, there was not so much demand, there was not so many transactions, that it came instantly to be $10 fees, right? At the time, it was still 1 cent and 1 cent or whatever. And then over time, it started to build up and up and up on Bitcoin, but on Bitcoin Cash, it's still low. So even though at the time of the fork, I felt like, well, Bitcoin Cash is the obvious thing, people weren't really like punished, or they didn't have much of an issue of sticking with Bitcoin. And because it got the main branding to most people who don't know anything about it, well, Bitcoin is the main game in town, right? If you don't know any different, you just think Bitcoin's obviously the one. I don't know about what these other copies are. Bitcoin Cash must just be some shit knockoff, or
it's like Digimon.
Yeah, exactly. It's basically the Digimon of cryptocurrency. If you were, if you're a kid in the 90s, yeah, that's right. Or the late 80s, I guess. So yeah, that's right. It's like Digimon. It's like Bitcoin Cash. And so, yeah, Bitcoin Cash seems like the inferior one, maybe, especially if you're big money that's coming to the scene and you don't do your reading. Somebody says to you, look, cryptocurrency is really kicking off and we got to get in on this. You think, okay, Bitcoin, I've heard about that 4 or 5 times. That's the one, and that's what you go for. But of course now, like in my previous episodes, I think we're getting to the point where this is now becoming enough of a problem for Bitcoin that people are going to switch, and maybe they're not missing out on the existing community, but on the new users like you, they don't even need to know the history of all this stuff or the ideology of what back and forth there was about it. All they need to know is
I don't want to pay $8.50 to buy a something from
Yeah,
someone.
that's right. Exactly. Like if it's just so self-defeating on the face of it. Like if it costs $8.50 for you to receive the money, so somebody else needs to send you. Let's say I'm trying to send $10. If somebody else needs to send you $18 to get through $10, and then by the time I send it to somebody else, it's only $2. Like, it's pointless, right?
Where does that fee go?
Where does the fee go? Right. So in the when I send a transaction to you on Bitcoin, there's what's called the outputs. So obviously, I can send from my address to your address, and then whatever I leave out of what I've sent is the fee, and the fee is collected by the miners when they make a block. So when a miner mines a new block, they get a certain amount of Bitcoin as a default reward, which is called the Coinbase. So that's like the issuance of new bitcoins. So they get some new bitcoins, and they get the transaction fees that come in from each transaction. So the idea
Oh, that's
there is
clever.
that, yeah, so the Coinbase, the default bitcoins which you get in each block, tails off over time, and that's kind of like the bootstrap fund. That means that there's an incentive to mine even when Bitcoin was worth 1 cent or 2 cents, right? You were still getting, and there was no transactions, you were still getting some Bitcoins. But then the fees contribute also to the income of the miners. And so if you ask Bitcoin Cash supporters, they will tell you, well, our strategy should be to get as many people using it as possible, because if there's hundreds of thousands of transactions every single day, all those 1 cent or two, 0.1 cent, they all start to add up, right? If you have a huge volume of transactions. So that will be how we'll be able to support the mining network in the future. But if you ask the Bitcoin Core people, their argument is sort of the opposite, which is this is not a self-sustaining system unless there's a decent transaction fees going to the miners, like $5 a transaction. And then, because you need a lot less $5 transactions to keep to fund a network than a lot more fractional fee transactions.
And that's the kind of the fact that it's expensive is because of a bottleneck, because there's a 1 megabyte limit on
Yeah.
something.
So when Bitcoin was first released by Satoshi Nakamoto, there was no limit on the size of the blocks. But at a very early on in Bitcoin's history, he added a 1 megabyte limit to the size of the blocks, because he was worried about, in the early days before Bitcoin had taken off and it was this big thing, that somebody would come along and they would just kill the network by just, you can write a script, right, a computer script, and just spam hundreds of thousands of transactions. And he was worried that with his little fledgling network that only had, I don't know how many people on it, right, but maybe 10 or 20 people, I don't know how many people, a few people, that if somebody came along and, as the internet is wont to do, decided, look, my fun is going to be ruining someone else's fun, then they could have just killed the whole project right there, right? So he put in this 1 megabyte limit so that the network wouldn't get overwhelmed with the amount of data coming through the system. But so he put in this 1 megabyte limit, and he wrote some comments saying, yeah, this is a temporary thing though, because we're never going to get to global adoption with 1 megabyte blocks. But then, obviously, at the time of the fork, which was six years later, so that was probably in 2010 maybe that Satoshi was doing that, or maybe early 2011. And then in 2011, Satoshi leaves Bitcoin, and then in 2016, you get this huge community, civil war about this 1 megabyte limit, because according to some people, such as myself or anybody who went with Bitcoin Cash, that was just a temporary fix at the time, and there's no sense in keeping it. But according to some people, it had become sort of enshrined in, this is the point of Bitcoin, or this is how it's supposed to work. And so they kind of fixed on that as, it's got to be 1 megabyte and not any higher, and we can't lift it. And that's why if you look in the history of this 10 years of Bitcoin type of video, he does a good job of explaining how there was various people trying to compromise, like what if we did 2 megabytes and we saw how that went, and then we looked at different things, or what about if we did 8 megabytes, or what if we had a scaling system, or there was so many different things proposed at the time, and the community went back and forth, and everybody arguing over their different versions and ideas, and trying to get enough people on the same page. And basically it went on for long enough. It was, probably 18 months or nearly 2 years of back and forth about all of this, that the people who just thought, fuck it, we just need to raise the limit. It got to such a point that it was like, you got to draw a line in the sand eventually. If you, talk and talk and talk to somebody and they're not listening, there was that section of the community that just would not budge or come to any compromise. Although there was these famous incidents, again, it's sort of explained in this video, like the Hong Kong agreement, so on, where there was sort of these agreements made, okay, maybe we'll do a hybrid plan or something, and every single time it all just melted down. Like people couldn't get on the same page no matter what they said or they agreed to.
So there's none of that limit on Bitcoin Cash.
I think what they changed it to, I think right now, I think it's 32 megabytes is the limit, but the plan is when it gets close to 32 megabytes to just raise it again, right? And I think what they actually have is they have a maximum of 32 in the protocol, but it's up to the miners, the miners and the nodes. They can choose their own limit. So I think some of them even have maybe like 2 or 4 at the moment. And that was how, when the original fork was going to happen, that people thought, well, why don't we just let the network vote, basically, and they could run whichever version of the software they wanted, which had the limit that they wanted. So if some people wanted 1 megabyte, they could run 1 megabyte, and according to them, only 1 megabyte blocks. And some people could run 8 megabytes. And then obviously, if most people were signaling for 8, then we could move to 8, as a community. But it didn't really work out that way. But I think that is the way Bitcoin Cash works now, where I think the limit is 32 megabytes across the board, but some people have it set higher or lower. And then the idea is, as the transactions grow and get bigger, we'll raise the limit, as and when necessary, which is hopefully not going to be such a big issue as it was previously, because this time you're only running Bitcoin Cash if you're on board with that plan. If you're not on board with that plan, you're running Bitcoin BTC Core or one of the other Bitcoin Diamond or something, I don't know,
or Bitcoin Cash 2.
Yeah. Well, that's like Bitcoin SV, that kind of forked off because they had their own ideas about how it would all sort of work out. Yeah.
Okay, that kind of answers one of my questions about because I was a little bit kind of concerned, I guess, about the fact that what would be stopping Bitcoin Cash from getting a $10 transaction fee, but because it doesn't have that hard limit set in, I guess it's kind of, the numbers get really big really quickly, so it's exponential, not linear.
Yeah, exactly.
A 32 megabyte blockchain is absurdly more is needed.
Yeah, that's right. Yeah, exactly. And I mean, it does come down to, again, that's not to say that for Bitcoin Cash that's the only plan for getting to a scenario where literally everybody in the world could use Bitcoin. But that's kind of like, that's one of the tools, is you raise the block size limit, and then there's other solutions as well that people are looking at too, right? And I mean, they have some of those on BTC Core, and so it is an attack on multiple fronts, right? In engineering, you generally you want to get your quick wins and then also work on some of your harder stuff as well, but being sort of ideologically puritanical about it, such as BTC Core did, and just that they've got this mindset that the 1 megabyte can never ever change, and they're just locked onto that. I have no idea how they're planning to get that to more adoption. And of course, if they don't get more adoption, they will eventually be outcompeted. That's just like I was saying before. It's a free market, and maybe Bitcoin Cash has the lower market value now, but
well, I guess that's the thing. They've doubled down because of the way, because of like the absurd price spikes and dips that you get. It's turned, well, at least a lot of the public. I'm assuming I'm using my perspective as the idea for like a public perspective, but a lot of the people I talk to see Bitcoin as like a stock that you invest in because it's volatile, and then you make money and you lose loads of money because you bought at the wrong time and stuff like that. But that's not what it was supposed to be.
No. And I mean, it is, and that's one of the reasons that cryptocurrency has had the uh, problems or the issues or whatever that it has, is because it is so new, and explaining that to people has taken a very long time. Like, people are not used to, in the finance world, they're like, okay, you've got cash, you've got bonds, you've got stocks, you've got real estate, and people understand these are the categories. And then when cryptocurrency came in, it was kind of like, this is a new category. People are like, it just can't be a new category. We've got the categories, right, in our financial accounting software. This should be it should be in this. But then, of course, it was.
It's a commodity.
It's a commodity, exactly. Or, I mean, it is sort of a commodity, right? And it is sort of a stock, right?
Well, that's how kind of Bitcoin Core, I think, wants to. From what I've heard, that's what Bitcoin Core wants to see itself as. It wants to be a commodity, not a
Yeah.
currency.
And I mean, that's nuts, right? It's called a cryptocurrency for a reason, right? It's literally in the name. But yeah, exactly. And if they want to make the world's greatest buy and hold commodity, then they're welcome to do that. But ultimately, the demand for a currency is driven by how many people want to hold it, right? And in the internet of cryptocurrencies, it's not really limited to a geography. It's not enforced as to, in this place you have to use this currency. So ultimately, if everybody is using Bitcoin Cash, why would they want Bitcoin? That's my logic.
Yeah. So, I've been asking. I was asking some of my friends. I was telling them that I was going to be doing this, and if they had kind of any
chip in,
questions.
yeah.
Kind of. One of them was like, "So I YOLO buy Dogecoin, right?" I was like, "Whatever." But another one of them kind of said that he kind of sees cartel just a way to do illegal transactions, and like what would happen if the government made it illegal to trade in
Yeah.
crypto.
Well, I mean, this is an interesting point, right? So obviously, Bitcoin did originally have its first major use case was this site called the Silk Road, right? That was the first big market for transacting in Bitcoin, which was a site on the dark net. I mean, I'm sure there's tons of them now, right? But this one called Silk Road was the first, where you could buy and sell basically drugs, but also other stuff like it was anything that couldn't harm people. Like, so in some places where they had religious crackdowns on owning copies of the Bible, I think they even sold Bibles on Silk Road for Bitcoin back in the day. But because it was obviously this non-governmental currency, you can't ring up PayPal and say, "Hey, PayPal, can we have our online drug market? Let me submit you my driver's license and all that." It just doesn't work, right? So Bitcoin was a way for that to happen. So of course it did arise, right? This guy Ross Ulbricht, who's now probably in jail for life, and I hope he gets out at some point, but it's not looking good. Anyway, he was this entrepreneur that had the idea, look, we've got this new currency and now we can sell things online, which the government or existing payment systems might not approve of, right? And then it was sort of the same with WikiLeaks as well. Julian Assange, he got a lot of controversy and stuff, but when the funding was shut down to WikiLeaks, he thought, right, well, I'll just accept Bitcoin then, because there's no way that they can shut that down. So Bitcoin did come from being historically associated a lot with that sort of criminal activity, but there's a lot of counterpoints to that, right? So the first counterpoint is that the favorite currency of criminals in the world is the US dollar, like without a doubt. Like Bitcoin or not, or any cryptocurrency, USD is where it's at. If you're a drug lord, you're stashing up piles of USD in your in your house. There's what you want is what everyone else wants, right? So in any technology, right? Like, criminals use mobile phones, they use the internet, they use Nike shoes, they use roads, they use everything, right? If it's useful for everyone, it will be useful for criminals. That's the first point. The second point is they were onto it early because in the black market, which is really just the market, the risk profile is different. On Bitcoin, you don't care. Oh, I mean, in the black market, you don't care if people think this is a bit weird or like it's outside the societal norms. All you care about is, does it work? If it works, you're onto it. You don't really care about whether it's got legal approval, whether it's got societal approval, whether it's volatile. I mean, that's a risk you got to take, right? If you're gonna do those kind of deals. So that's why criminal activity was initially quite attracted to it. And then another point about it is that I don't even think that it was necessarily such a bad thing. Like, I don't disavow or want to sort of sweep away that history. I think it was quite important because it was also super exciting, right? Is that then in the early days of Bitcoin, you put out a media story, drugs and hackers and all that stuff, that gets clicks. People are like, what is this? If Bitcoin was not exciting, if it was boring, how would people get involved in it, right? And I think even you maybe had a touch of that when I sent you some cryptocurrency the other day. You were like, this is cool, right?
Oh mate, I've got digital money. It's like I feel like I'm in sci-fi. I've got just
Yeah.
credits. Charge the credits to my credit account. Like what is this? This is the
Yeah,
future.
exactly. And that's that same thing, right? Is that Bitcoin was dangerous and exciting, and people were thinking, wow, this is outside the norm, because we're just not used to that kind of world where we have a choice of what currency we use or whatever. And so I don't think, yeah, again, that criminal history is not a big point. And now finally you come to the objection, well, what if the government bans it? Okay, well, firstly is it doesn't matter so much if any one government bans it, because every government is in a prisoner's dilemma against every other one. Because if a country bans Bitcoin, all it does is guarantee that, or any cryptocurrency, right? If they ban cryptocurrency, all that does is it means that all the investment and all the money and all the companies and so on that want to be involved in that will relocate, right? They'll be somewhere else. So if you're a country that is pro cryptocurrency, you get a lot of investment, and all the cryptocurrency industry will flow into your country. And the more countries that ban cryptocurrency, the higher the incentive becomes for any other country to just say, we're going to be the cryptocurrency place. That's fine. And then of course all the money will like flood into them, right? So for any one government to ban it, all they're doing is shooting themselves in the foot, because they're just encouraging the money to go somewhere else, whatever legal regulation they want to have or however involved they want to be. If they just cut themselves off from it, well, the world's a big place, right? Somebody somewhere will find a way to make it work, or somebody somewhere will be like, look, this is an opportunity. So I'm not particularly worried about that. And for the most part, that's what we've seen, right? Is that in about 2014 and 2015, legal regulation and government involvement was a huge topic in Bitcoin. And like the US government has made some, like it was very uncertain at the time. They've sort of settled into a pretty reasonable middle ground, I think, as time went on. China sort of semi-banned it and then unbanned it, and all that kind of thing was happening. But the fact is, as it becomes more accepted and normalized in society, at a certain point, it's too big, right? You can't shut it down. And I remember somebody telling a story on some podcast or something where they were there at the time when those discussions were going on, and somebody who was from the government said to them, like, look, we've looked into all this and we've realized that even if we really wanted to, we can't shut it down. So we kind of don't have any alternative. We got to roll with it and figure out how to work in that framework. So yeah, those are my thoughts on the sort of criminal and regulation parts of cryptocurrency.
So the kind of there's a benefit as well, that it's kind of that a government can't control it, right? You were talking about, I think it was in the last episode, about how Rome used its money up areas and then just buy them. The fact that governments want to do that kind of thing in general, I guess, but the fact that they then don't have control over the money, does that just mean that big corporations, then we become like a corporatocracy?
Well, I don't know.
More so than we already are, because whoever
Hey, what was that? You broke up a bit.
the power, if whoever has the money has the power, and the governments can't control the money, then that means that the governments don't have the power. So where would there would be a power vacuum? Where would that potentially
Well,
lead?
I don't know. I guess this is what we're going to see in the world. We're just going to wait and see how it plays out, right? But in my mind, the way it sort of works is that governments historically they basically have two sources of income, right? They have direct tax, where they say, okay, we're going to charge you, 20% of your income or whatever, and then they have indirect tax, which is they inflate or debase the money supply, right? So that's what happened in ancient Rome. It's what happens in the U.S. government now. Like, there's this nuts stat that I think people should look into or find out about, that there's something like $6 trillion of US dollars in the world, and 2 trillion of them were created in 2020, right? So that's the rate at which new currency is being issued, right? And that doesn't all immediately flow into society or rocket prices out of control, because a lot of it is obviously hoarded, in banks and in different financial instruments and so on and so forth, right? But you can look that up and research. I'm definitely not the world's biggest expert on all of this, right? But that's sort of the idea. So in Bitcoin,
It's crazy.
and so in Bitcoin or in any cryptocurrency, well, the first thing is that you can just create a cryptocurrency where the government is in control. The government can make their own cryptocurrency if they want, and if it's better than Bitcoin or better than Bitcoin Cash, people will use it. So they're welcome to sort of compete against on the free market. But of course, I mean, when you think about it, I mean, they're not going to have very much luck, right? Because if you say, look, you can use government coin where you get taxed 10% automatically every year, and Bitcoin where you don't, it's a no-brainer, right? What are people gonna invest in? And so, yeah.
So I guess, like, ultimately, a government could take taxes in the form of
Yeah, why
crypto as
not?
well.
Yeah, exactly. And there was even an article recently about the Miami, like, local, what's it called, state or city council or whatever, was sort of the guy there. He was big on it, right? So whoever was I don't know, in charge in the government or whatever, and so he was kind of like, yeah, maybe we can accept Bitcoin. So yeah, basically just having that kind of system where the government is not in control, all that means is that they don't have that option of direct tax or indirect taxation, rather, right? Any taxes they have to be very honestly, this is the tax rate, right? Because the current effective tax rate in most places in the world is higher than the amount that you see on your bill, because not only is it the percentage on the bill, but also the devaluation of your money, because the government gets first bite at whatever new currency it creates. So when you consider that and you think, okay, then this is where Bitcoin is sort of quite libertarian in philosophy, is that if it spreads around the world and that's the way it is, then the government will be in a position where anything that they want to have, they will have to be able to justify the taxes directly, right? And I don't think that's going to be such a bad thing if that means individuals, there's more accountability in terms of the government as to what they can and can't spend and what their financial policy is. I don't think that's going to be such a bad thing. But that's my own personal view, and as to anyone else, well, they can make their own ideas. But I would suggest that perhaps they don't necessarily have too much of a choice, because Bitcoin's going to keep growing, whether or not they agree with it. But they're welcome to start their own currency with whatever tax scheme they want, and see if it can win out.
Well, that's something that I was asking. What is there? I mean, obviously, I couldn't. What is there to stop you from starting Jeremy
Nothing.
Coin, for
Nothing,
example?
and that's why if you go on coinmarketcap.com, like I do at the start of every episode, it's something like, let's see here, we've got, it usually says at the top, look at this, okay, cryptocurrencies, 8,361 cryptocurrencies at least that are listed on this site at the moment. So yeah, there's just pages and pages of Engine Coin, Terra USD, Decentraland, 40 pages of this stuff, right? So nothing stops anyone from creating a cryptocurrency. So then it sort of comes to the question of going to be like, well, why is Bitcoin better than any other one? Why is Bitcoin Cash better than any other one? And the answer is basically the network effect, which is that all things being equal, you generally want to be able to transact with the largest pool of people, right? It's kind of what I was saying before. And that applies to government currencies as much as it does to cryptocurrencies, right? But the difference with government currencies is that they don't compete in a free market. Well, they do, but only to a certain extent, because in a certain country, you know that currency will always be accepted, right? But if you didn't have that restriction, probably the whole world would just start using US dollars, right? Because like that's, like Venezuela or something in
They
Argentina.
kind of already do
Yeah.
in some places.
Yeah, that's right. So the bigger currency sort of slowly eats up and swallows up the smaller ones. And it's the same in cryptocurrency. So then you might say, well, why would cryptocurrency ever outcompete, the US dollar? And the answer is, as we've seen, is it's doing a pretty fine job of growing against the US dollar, no problem, because even with the US dollar being so entrenched in the global financial system, it's still less useful or less good as a currency than Bitcoin is. So people are still moving into Bitcoin. And as it grows, that effect just compounds. So the bigger Bitcoin grows, that like if Bitcoin can get from $0 to $1, then it can probably get from $100 to $101, right? So in that sense, people should have increasing confidence, as I think they do have. The bigger it gets, the faster and the bigger it will continue to spread until, in my mind, it effectively swallows up the whole world economy. And so, yeah,
You can't just print a third of the existing Bitcoins again and put them into circulation, for example, in 1 year.
yeah, no, yeah, exactly. It's just not an option. It's just your only options are you could, but you would have to get the majority of the Bitcoin network to agree to it. And are they going to agree to that? Not a chance, right? Because it's not in their best interest. It's in the best interest of everyone who's already in Bitcoin Cash or in Bitcoin that the 21 million limit stays the limit, because that guarantees you've got a certain percentage. That's the rules, and everyone's pretty happy with it, right? So.
That's the thing. If there are 7 billion people and only 21 million Bitcoins, and this is a global currency, one Bitcoin, or one Bitcoin Cash even, which is within financial grasp, sounds like a fantastic deal.
And this is why people have been shouting from the rooftops about, oh, everybody invest in this for the last 10 years, right? But it takes time to sort of come to this understanding, right? That is only just, this is just my premise that the entire world will be using cryptocurrency one day. But a lot of people think cryptocurrency, well, they think it's not a currency, or it's not real, or it's a scam, or it's going to go away, or, whatever reasons they have for not liking. I don't know. It doesn't jive with whatever they were taught in economics class. I don't know. It could be any number of reasons, right? But the point is that, once, if you're like me, or if you come to that same understanding that cryptocurrency is either going to take over completely or that it's just going to grow from where it is, then it's pretty easy to see that, one Bitcoin is worth a lot, right? And that's why, in 2013, when I was buying Bitcoin, I was telling everyone, look, this is going to be way more valuable. Some people listened or didn't to certain extents. But then what do you know? Give it 5 more years, and now Bitcoin, it is a lot of money. It's like whatever it is, 30 something $1,000, right? That's a lot more money than some people have. But at one time it was $200, and anybody could have picked one up. Well, not anyone, but it was more in reach, right? But over time, it just becomes more and more. As the value of the currency grows, as the value of the network grows, as more people want to hold cryptocurrency, then of course, as the pool expands with a limited supply, the value of each bit goes up and the achievability of it goes down. So to anybody who's listening to this podcast right now on 30th of January 2021, you've got your opportunity to go out, buy one Bitcoin Cash, and have 21 millionth of the world's entire value, or eventual currency supply today. That's my prediction, and we'll see in 5, 10, 20 years what happens.
Yeah, crazy. Okay, so how there's the whole kind of cycle of hype. I think you called it a cycle of hype.
The mania, the bubbles.
Do you personally keep an eye on that and sell out and then rebuy at certain times?
I mean, so the answer basically is no. I was thinking about this today. I will do a video where I go over that whole cycle and how it works and how it kicks off, and talking the history of what's happened in the previous bubbles and everything like that. But the essentially, if you think about in each bubble, the price is at a certain level, it spikes up to 10x that or whatever, and then it crashes down to usually let's say maybe 2x of what it was before, but well below the thing. Everybody knows what a bubble looks like, right? So in that kind of model, well, do you know, like, let me just we can talk about this a bit. Bubble psychology. Let's just talk about this.
Because it makes loads of people realize that it's a thing and that they should potentially hold on to for next time.
Yeah. So basically, if you look at, I just want this to like, well, that's Google being slow. But basically, you just want this. Hang on, maybe let's just copy image location. So basically, if you look at this sort of a chart here, can I zoom in on this? There we go. Right. So this is pretty much how it works, right? Everybody gets really fired up. It goes in a huge like peak, and then it crashes down. But at the end, basically, it is still higher than when it started, right? Because in the meantime, even after all this mania, like you're saying, some more people have clued in that, wait, this is actually pretty cool, and they want to have some as well too, right? So if you think about the Bitcoin price as being a series of these, which it has been, and like I'll do another episode about this, but basically where it went from $1 to $10 and then down to $2, and then eventually it went to like $2 to $30 and then back to $10 or something, and then it went up to like 200 and then back down, and then it went up to 1,000 and then back down, and then went, this latest one is to 31,000 or whatever, right? So it is that series of bubbles, and each time that it goes through, see, like this is obviously the most recent bubble is the Bitcoin Cash chart, but as it goes through those bubbles, it sort of provides fuel for the people who say Bitcoin is a bubble, and they're sort of correct. They're like, haha, it crashed, I knew it, it's gone, I can forget about it, right? But unlike any other scam or Ponzi scheme or something like that, the whole idea of cryptocurrency is that there is actually legitimate value to it. It is a real thing. So even though it goes through those manias and hype cycles, at the end of the day, it doesn't crash and die. And so then once people have heard about it enough times and they've seen it grow and crash a few times, they start to think, wait, what's going on here? Like eventually, you can't just say, look, this is like Bitcoin can be in a bubble right now, but sooner or later you get the idea that the whole idea of Bitcoin, the whole idea of cryptocurrency is not in general a bubble.
Yeah.
And so so hang on. So if we go back to this chart a little bit, so if you think about this, if you buy in here when it's already rocketing off, then you can try and sort of time the market and buy here and sell here, whatever like that. But what time has basically proven to most sort of seasoned cryptocurrency investors is that if you try and buy in here and sell in here and all that, all you end up is doing is screwing yourself out of money, because it's so hard to get it right and to be, when exactly was the top or whatever. So my strategy is really to just accumulate some, and that's it pretty much, because every time that I've tried to get it right or whatever, I've ended up with less cryptocurrency than I started with. But it is something that people always try and do. It's very attractive to people. Like, oh yeah, I could double my money, like or whatever. But once if you're in it before it's a bubble, or if you get into it at a bubble, the biggest mistake you can do is just selling out. What you should do is, as the price crashes off, you sort of dollar cost average. You buy a little more slowly, and then by the time the next bubble comes around, you're sitting there chilling, right? But what people do is they get in these bubbles, they crash, they sell out, and then they forget about it, and then 3 years later they hear it's gone through the roof again, and they think, why did I sell out? And then they buy some more, they get into the same cycle. So really you've got to see it as, and it comes down to education, right? And that's part of why I'm doing this podcast, is that once people understand, okay, this is a cycle, we're at this point in the cycle, but in the long term, this is a technology, it's got this revolutionary aspect, it's doing this and this, people understand it, then maybe they're more like, oh, okay, I'll just buy a little bit at a time, and then when it goes through a bubble, I'm already sorted, right? The best point to be at the bubble is is at the start before it even kicks off. But naturally, most people find out about it or get involved when it's in the bubble.
So I guess that kind of leads on. You don't really spend that much time like checking it because you're not there. I mean, other than because it's like interesting to you personally, you're not there like checking it minute by minute to see if there's been an absurd spike. And
I have been in the past. You know, I have obsessively followed the price of cryptocurrency, and definitely, especially a few years ago when I was really into it, I just had such an absurd, you know, allocation of so much like cryptocurrency. I was following it all the time and whatever, and it wears on your psychology. You're just having something that volatile and that that volatile, it just sort of drains on your state of mind. So yeah, that at a certain point I sold quite a lot of it because I was like, God, I can't live like this, right? Where I was just obsessed with watching the price and I so like jacked into it and everything. But from you know, with that experience behind me, I mean, now I don't. I mean, I check the price every day, just at least at the moment, you know, because I'm doing this podcast and stuff. I'm curious, but I'm not too super concerned about whether it goes up or down. And the reasons for that are that the volatility is less overwhelming once you understand the fundamentals, basically, right? If you just bought cryptocurrency because you heard it's hype and you're excited about it, then every slight thing is sort of confirming or denying whether you were right as to this investment you made or whether your mate hyped you up or sold you down the river. But once you understand, okay, this is a revolutionary technology that's changing the world, once you've transacted with it a bunch, once you've bought things with it, as it just becomes a routine everyday thing, you worry about it less. Another thing is that I mentioned before, but I'm trying to switch over some of my income into Bitcoin Cash, and when you do that as well, I think that also helps with dealing with the volatility, because then it's basically a no-lose situation, right? Either Bitcoin Cash goes up, in which case it's good because I got paid last month, still got some of that, or it goes down, in which case my next paycheck is bigger, effectively, right? I'm getting paid more Bitcoin Cash if my income is denominated in you know, British pounds, right? So then it's basically it's a no-lose situation. Either Bitcoin Cash is going up, or it's, you know, in which case my net worth is expanding or whatever, you know, that Bitcoin Cash part of it is expanding, or it's going down, in which case I'm getting more for my money, basically, with the long-term view that eventually it'll go back up again, which it always has, right? So that's sort of
So I figure that this is something that once, for example, Tesco's or Asda start accepting cryptocurrency.
Yeah. So that's a big shopping sort of supermarket chain for people outside the UK.
Oh yeah, Walmart. Once Walmart start accepting cryptocurrency, what do you reckon it would take for that to happen?
Well, I mean, the number one answer is just time. So that's it, you know, as every year, every day, you can't go backwards, basically, in the cryptocurrency stages. And I'll probably want to do a video about this as well too. But when you think about it, everybody starts at ignorance. They don't know anything about cryptocurrency, just like every topic in the world. And then and then you get to you know, it's sort of like a 5 stages of grief type thing, right? People go into denial where they're like, this is not real, or I don't know about this, or I don't understand it, or whatever. And then it sort of gets to the point of curiosity, right? Once they've heard about it enough times, and they look into it, and then, like, you know, for instance, you have all these questions, and then slowly those questions get answered, and you know more and more, and then you try using it yourself. But you can't unuse cryptocurrency. If you've used it before, well, you can maybe say, I don't want to use this or whatever, but you can't deny to yourself, oh, that's how it works, and this is, you know, you're more comfortable with it than you were before when it was unknown and scary. And so as time goes on, just more and more people in the world have got familiar with the idea of cryptocurrency and have used it and transacted with it a bit. And yes, okay, it's still sort of splintered into these different cryptocurrencies, or the forks with Bitcoin versus Bitcoin Cash, or all the other options, all those sorts of things. But that's still the pool of, you know, it's still constantly growing, right? It's much easier for me to get on the same page with somebody who already knows about crypto. Maybe we just disagree on the specific one, but we're still both don't really dispute that it's a thing. And so
You both want a decentralized, anonymous, instant payment system.
Yeah.
With all the kind of perks that not being attached to the government has, like.
Yeah. And then
you want to give your mate a £20 note.
Yeah, that's right. And then once that pool of people, and this is where I think people misunderstand, is that in cryptocurrency, like in 2014, maybe 2015, there was a huge focus on more merchants. People were sort of being like, Newegg accepts Bitcoin, or Microsoft accepted Bitcoin for a little while, and that was really exciting, and that was definitely a good thing. But I don't feel like that doesn't need to be a huge focus. And while that's one advantage that Bitcoin Cash has over Bitcoin, is that it's starting to build up that network of merchants again. It's much more important to have the holders of, like, the people accepting, what do you say, like people saving a cryptocurrency, then the merchants just follows on from that naturally, right? Because let's say if 5% of people in society are holding cryptocurrency, then for a merchant, well, maybe you're missing 5% of business if you don't accept that, right? Or maybe people are going to naturally shop at places that have the currency that they want to spend in, which is not something we're used to, because we're used to a world of, in one area there's one currency. But as time goes on, as this idea of having a proliferation and a choice by the consumer goes on, then the merchants will sort of be in the position of, oh wow, I've probably got to accept more and more different things. And obviously there'll be services that you can pay in any currency, and then it converts to whatever the merchant themselves sort of wants. So I think as more and more, like for instance, you didn't have any cryptocurrency and now you do, and maybe you're keen to give it away or maybe you're not, but either way you're now potentially a customer. If
I want to hoard it like a dragon.
Hell yeah, exactly. That's right. And I think that's a good thing. And obviously once you have the more people you have who want to hold this at any cost, or not at any cost, but the more people you have that want to save in cryptocurrency, then the more commerce just arises, right? Because if I wanted something from you, or you wanted something from me, just as per normal, if I bought you a beer or whatever, I'd be like, give me Bitcoin Cash, son. Like, don't give me this GBP, right? Like, so I think the merchants, that naturally arises from having a large pool of people that are already holding and willing to transact in that currency.
Yeah, I've got my 5 million Bitcoin Cashes. I keep like opening my phone and just having a look at it there.
Yeah, it's
and
exciting,
I saw that, like,
right? Yeah.
there's what I still don't quite get what 130 confirmations means.
Right. So, well, when we looked at that graph of the Bitcoin split and everything like that, and I was showing you with the blocks going along.
Yeah.
Well, so that's just how many blocks there has been since that transaction got into a block. So that's what when we're looking at this, transaction street, that's what the bus is. The bus is a block, right? So all the transactions get into a block, and then when it happens, you sort of got to be watching it for a while to get it. This sort of light goes green and it ships off into the blockchain, right? That's the block.
Confession, kind of.
Hang on, say that again. You say it again.
So every transaction after that transaction confirms the transaction.
Well, no, not every transaction, but every block. So a block of transactions gets layered on one at a time. So it's sort of batched up, right? But and this kind of goes into all the mining and the proof of work and everything like that. But basically, if something is a very recent transaction, then in theory, it's much easier for somebody to like unwind it, right? Let's say if they made a hostile takeover of the Bitcoin network, like let's say if there was a fork, right? Whether or not your transaction ended up being in there or not is more, if it was more recent, it's obviously more contentious as to whereas if it's, if it was a year ago, then obviously if there's a fork now, nobody's going to be disputing over this transaction that was a year ago, right? Or
Nice.
if it kind of comes down to with the miners and everything like that, if somebody, let's say, wanted to sort of do a hostile takeover of Bitcoin and they wanted to try and sort of spend some money to you, but then, get a Lamborghini or whatever, get something from you, and then rewrite that out of Bitcoin, well, the most recent ones is obviously more vulnerable to that kind of opportunity, right? And that's another point where Bitcoin Cash and Bitcoin Core sort of diverged as to their philosophy, which is Bitcoin Cash has what I would say is the original intent that, just like when I sent to you, in general, zero confirmations is fine for medium or small amounts. If you're buying a house, maybe you want to wait around for an hour to check, but I'm not exactly worried that if I send you $5 of Bitcoin Cash, that somebody's going to hijack the whole fucking network to get that $5, right? So that's called zero confirmation transaction. You just send it and you've got it. That's it. But with the Bitcoin Core, they were very worried about these sort of zero confirmation transactions. So they added, and of course it came about because the fees were so high, the transactions were getting stuck, and there was a lot of clamor about that. So they added this feature called replace by fee, which was basically that you could resubmit the same transaction with a higher fee, and it would override the previous one. And so that means if things are getting stuck, well, you can outbid yourself, but it also means that it's less secure for those zero confirmation transactions, because I could send $1 to you with a $1 fee and then send it back to myself. Or I could send $100 to you with a $1 fee and then send it to myself with a $2 fee after you'd already given me, whatever I was buying. And there you go, right? So that's another point where the two philosophies have sort of diverged.
I guess that kind of fits in with Bitcoin Core being a commodity, not a currency again, because that's them directly stating we don't care about small amounts. We are only in it for large transactions.
And slow ones as well, too. Ones that you can afford
Bitcoin
to sit around.
yeah. Bitcoin is about large transactions, which is,
But it's a weird idea, right? Because there's no reason that Bitcoin Cash can't be for large and for small transactions, right? So I think some people who support Bitcoin Core, they kind of have this idea of, well, maybe Bitcoin Cash is doing these small shitty transactions, we don't really need to worry about that, but ours is the real currency. But the thing is, if once there's enough activity of small transactions going on, well, people can just send medium transactions there too. They're not going to switch currencies to do larger transactions, or even very large. There's no ceiling on Bitcoin Cash in terms of the size, but there is a ceiling, or there is a floor on Bitcoin Core in terms of the size that is the feasible sort of size of transaction. Yeah.
I find this is so mesmerizing watching the buses of transactions take off.
I can take it off if you want, but I sort of thought it might be good to leave it in there in the VOD, because this I love this visualization. I love it. It's so amazing because it just explains everything in one page. You don't even need to know about Bitcoin, as you just look at this and you just see the Bitcoin Cash is working. This one, you see all these people waiting for the bus, and then you see the fee is $10, $8, but it'll be $10 soon enough, and you just think, why would I want to get involved in that, right? It's that simple.
I know which bus I want to take to work,
or
I know which bus I want to take to the shop to buy my lunch.
Exactly. Okay, all right. Maybe I'll take this off then.
There I go. There I am. So I guess your previous guest said that they'd spent a whole month living only on Bitcoin.
Yeah, Bitcoin Cash, yeah.
If there aren't that many merchants, how is that even possible? You just kind of convert it at point of sale?
Well, yeah. So I think, I don't know, I think he would have to, I think if you go back and listen to how he sort of explained that, I think the idea was basically that for things that are merchantable in Bitcoin Cash, you would have directly spent that. And then there are services like, I think this like sort of BitPay, which is, again, this is sort of, historically they sort of had to change their business model, right? But anyway, that's a different story. But basically they've got this idea of having this BitPay card, which is basically like just a bank card, just sort of like when you go overseas, your card is in, maybe it's in British pounds, and then you go to America and you spend it, and the bank automatically sorts out, okay, you've got pounds, but we're in America, they want, and they sort out the conversion behind the scenes and maybe charge you a small fee, right? So that basically you could do that same idea in Bitcoin, where your Bitcoin Cash is saved on your card or is in your holding balance, and then when you spend it, I guess if they accept Bitcoin Cash, well, there you go, it's just cash to cash. But if they want a different thing on their MasterCard or a little Visa FPOS machine, then it just gives them whatever they want and does a little conversion whenever you need to. So I think that's what it was sort of meant about that. But of course, the idea is that as basically that things have started with people have to spend a lot of effort to get Bitcoin Cash, and then they transact it to someone else, and then probably a lot of the time that person just sells it for for a government currency or whatever if they need to use it. But as again, it comes back to that same thing I was saying before, as the pool of people increases and as the amount of people who will accept it for whatever their job is increases, sooner or later that money just starts flowing around in the cryptocurrency economy, and it doesn't jump back and forth between the government currency, right? So then more, if you think of the government currency as like a big circle, and then the crypto one's a smaller one, so money is flowing back and forth between the two. But as more and more just builds up in here, then this one starts to shrink and all the value just flows over into the cryptocurrency economy. That's kind of how I see it. And so for me, obviously, I'm trying to encourage that to the extent that I can, in terms of like getting paid in cryptocurrency, spending off my government money if I don't want it to anyone, and where possible, if we were having beers, definitely I'd try to pay you back in cryptocurrency now that you're sort of involved.
I would be well into that when lockdown's over.
Hell yeah, dude. Hell yeah. I'm so keen. It's gonna be
I'll
amazing.
get you dinner in my my useless pounds, and take milli bitcoins.
That's right, dude. That's the attitude.
This is the thing. I would be really hesitant to do that, with the knowledge that this cryptocurrency is just so valuable, and it's more valuable in 5 years than it is right now. So I don't know, I'm spending future gains on something that I wouldn't need to spend it on now if I've got pounds.
Yeah, exactly. And that's sort of part of the theory in two senses. In one sense, it's for a lot of traditional economists. That's why they're like, this is bullshit, this cryptocurrency, it's never going to work. Why? Because they say, look, we have an inflationary currency so that people spend their money, because if not, everybody hoards it. And what they actually mean by hoarding it is saving it, right? But that's not really a problem, because that's why the average consumer, there's all those stats about how, so many percentage of people have less than, 1 month of, cash in their bank or whatever, right? Is because we live in a society where we're incentivized to constantly just spend your money. You can't just chill and know that it'll all be fine. But that's not really the same in cryptocurrency. But no matter what the incentive is, you're still going to spend money, because at some point you've got to eat. You've got to have, you need to pay your rent, and you need to buy food at the very least, no matter who you are, basically. So it's still guaranteed, there will still be money flowing in the economy, but the consumer preferences is obviously going to shift, where maybe people will buy less random crap that they don't want if they know that their money is actually good. And then that raises the bar for merchants to deliver higher quality products that are have to be good enough that people will pay for it, and I think that's actually quite a good thing. And then, like you see, that's how the cycle of adoption drives, as every individual person sort of in their own mind, their mindset switches from, it's valuable to me to acquire government currency to it's valuable to me to acquire cryptocurrency. Well, then every time, when the Bitcoin trades on the open market, when Bitcoin Cash trades against other currency, every time a deal is done, there's still the same amount of Bitcoin Cash and the same amount of that currency in the world, right? Because you've just swapped. But the price goes up when there's more people, their preference is higher for the other one. They're just, once everybody in the world agrees, I wouldn't give you a Bitcoin Cash for $1, then the price goes up. There's no actual change in the amount of either one, and so that's why the price just goes up over time, because more and more people are like, I'm not giving I'm not giving you that. Like, I'll give you this other government currency that I don't want, or I'll demand more for this cryptocurrency because it's valuable.
Like, I think it's $2 worth of Bitcoin Cash, and I would not spend that for a can of Coke, a packet of crisps, and a chocolate bar. That's just not. It's far, far more valuable than that.
Yeah, that's right, exactly, and that's that. I think that's going to be a good thing, to be honest. I think if all of consumer habits change to be like that, with everybody being less sort of spendy on whatever garbage that they didn't really need, I think that would be great. And it's in fact, so potentially, again, this is just me spitballing here, this is very philosophical, the point that we're getting to, but so maybe like issues like health issues that people have because of the modern diet, like maybe that would be changed if buying a Coke wasn't so much as like, oh well, I don't even really want my money anyway because I know it's depreciating, I may as well just have this junk food, right?
I could spend, well, if it was 50p for a can of Coke, take £1 now, because in 5 years it'll be £2.
That's right, exactly. Whereas the opposite in cryptocurrency, you get rewarded for basically supporting the network, for building an economic bedrock of holding and saving, hoarding. But yeah, I think it's hoarding. That's fine. Saving the coins. If you have savings, you have more purchasing power. That's how it should work, right? It's very bizarre that we've become used to this system where, I read in this article the other day, I thought it was so true, really just switches a light onto you, that the idea is that savings is low risk, cash savings are low risk, and investments are risky, right? But in the modern economy, it doesn't work that way. If you have cash savings, you can't have more than too much of that before everyone's like, you need to invest that, you need to invest. Like, you need to take on that risk to save your money from getting whittled away to inflation, right? Like we were saying before about how many trillions of USD.
Like, I've got a small, I guess, small to medium amount of savings, and it's just kind of in pounds in a bank account. And I just know that the longer I wait to turn it into a house, the less of a house it can buy.
Exactly. And that's not the way the economy should work, because there's more things being produced in the world all the time. The standard of living is rising, things are going up, but we're just used to this. We've just come to accept it as kind of this fact of life, that we do all this hard work, to build up and save value, and then it's all just suddenly bleeding away into the system, or not really into the system, but to the government, who's churning out the dosh and then handing it out to their favorite cronies, right? Which is, maybe some of it goes towards, social benefits and things like that, but a lot of it undoubtedly goes to the people who are closest to the source, right? So that's kind of one thing that cryptocurrency is really going to change in society, and that's why with the GME stuff and everything like that, it's really switching the light bulb on for people that, if we're going to change the system, there's far more actionable, and that's why it is, I think, quite realistic when I say that I think Bitcoin Cash is going to be the global reserve currency. I mean that. I can't see at what point it would get derailed. Like I said, if it can go from $0 to $1, I'm sure it can go from 100 to 101 or whatever it is now, 400 to 1, and it's just going to outcompete all those currencies slowly but surely. So
I can't. I'm in. I'm in for. I'm in for the kind of, for the paradigm shift that it represents, the societal attitude, the shift in kind of public consciousness that it represents. But it's a really kind of anti-boomer type thing. It's the opposite of, not like anti-boomer as in, oh, boomers are awful, but the kind of opposite of that kind of, those kind of the priorities and the incentives.
And the thing is, that's one of the amazing things I think about it is that it is directly actionable. It's as simple as that. You don't have to go to the government. There doesn't have to be some legislation, or there doesn't have nothing like that. It really just comes down to, like, if you say to somebody, I think cryptocurrency is going to take over the world, and they say, I think it's not, you don't even have to say, how much do you want to bet? All you have to do is just get some cryptocurrency, and before then let the market decide, right? And historically, people who made that bet, the earlier they made it and the more significantly they made it, the more they were rewarded, because they were ahead of the game, right? And they were taking on that risk that society would shift in that direction, and for the most part they've been right, and I think they're going to continue to be right. So it really doesn't matter, for other people, whether they're more or less involved. I understand that a cryptocurrency is not a number one priority for everyone. If you're busy, you've got a house, you've got a life, you've got kids, you've got whatever. People are busy, they've got things to do, and as any marketing person will tell you, getting somebody to try something new is not easy, right? It needs to be like a critical issue for them, generally speaking, before they'll start to like think about it. But nevertheless, once it is an issue, people get suddenly very interested, right? So people come to cryptocurrency for their own reasons, whether it's like originally it was very ideological. That was already a big issue for people, and so that's what drew them to it. And then if you're in a country where it's hyperinflating, like in Venezuela, where I think Bitcoin Cash adoption is starting to kick off a little bit, then it is a big issue right now. Like your money is draining away. And then for everyone else, like you say, you have that same problem at a lesser degree, but enough that now, you're kind of like, let me get involved. And eventually that spreads to everyone. And of course, the longer things go on, the more people who haven't adopted are in that situation of realizing, I used to just wave off that one person who told me about cryptocurrency, but then somebody else told me about it, and somebody else, and now and they started to realize where I'm the one in the room who's actually who's on the wrong side of the trend, who's missing out, so
I think part of it's the perception of it. Before speaking to you about it, cryptocurrency was just this kind of, it was a volatile commodity that people gambled on, basically. But looking at it from the perspective of like just a decentralized money, like the need for it and the necessity kind of globally for it kind of just gives you a really different perspective on it, how important it is, and how important it will be in 10, 15, how kind of nothing it is now. Like, it's I can't believe it's such a, like, I'm 10 years, I guess about 10 years late to the party still, and
you're
I'm
still super early, dude. You're still in the 1%. Definitely, if you buy now, you'd be in the 1% of humanity to have cryptocurrency. There's no doubt about that. And I mean, it's been and that's why I think that's part of the reasoning for this podcast. Is I know that there's going to be a huge future, ongoing surge of people who are, what is this all about, and they don't know. And I mean, sure, there's a lot of YouTube videos and all that, and I mean, you can read the white paper, right, and all that stuff. But that's a lot, and it's hard to sort of get it, So that's why I'm trying to do this podcast to sort of hopefully help and explain it. And really, you just need to get over that first little hurdle. The biggest jump is from this is not a real thing to, wait, what's going on here? That is the biggest point. Whether the other stuff, I really need it, or how much money I should put into it, or how is this going to work, or what are the details, or any of that stuff is nothing compared to, like, it's a scam, or to I don't like this, is basically what it is. That's the biggest objection that people have to cryptocurrency is not, they usually can't say what's wrong with it because they don't know very much about it. You don't argue with people who say, I object to cryptocurrency because these 10 reasons. They're like, I don't know about cryptocurrency, it's a scam. That's it. And you say, can you tell me, how does a cryptocurrency work? And they say, I don't know, it's just a thing on the internet or something like that.
It's electronic money that people use to buy drugs and assassins.
Yeah, but even that raises so many questions that it's pretty easy to defeat. And you're like, well, why didn't we have that 20 years ago? Why is it suddenly big now? Like, what changed? You know, I was like, oh, I don't know. Or why would people accept that? Why wouldn't they just accept money? You know, and then it leads to this rabbit hole. I think like you've been down in the last couple of days, which a lot of people have when they come to cryptocurrency. I definitely did. Where you start asking, you start thinking, wait, what is money? Why do I value these things? Why would I trade for something, for this or that? Who set this all up? All those questions come to you.
Actually, I'm real. I guess I'm realizing the time, but I've just realized a question that the white pages did raise for me.
Yeah, the white paper. Yeah,
Was it called the white document, the white paper,
the white paper.
the
Yeah, yeah.
white paper? So it said something along the lines of the system is incentivized to stay secure because the computational power required to break it, you might as well just spend mining instead.
Yeah, yeah.
What if the kind of negative agent wasn't to kind of make profit off it, but was just interested in destabilizing it as a currency?
Well, who knows? But I mean, they are welcome to like attack it, right? And I mean, like let's say hypothetically, let's say we imagine, the U.S. government decides, holy shit, this Bitcoin stuff is getting out of control. We've got to
Yeah.
we've got to shut this down. So what we're going to do is we're going to try and take over the network ourselves. Okay. So the first thing is if we look at let me just bring it up here. But the first thing is if we look at the mining network, it's been going exponential. I think I even mentioned this in one of the other ones, but I really want the graphs. There's somewhere here, charts. If we look at the mining network, it basically has been going up exponentially ever since it was invented. Where is it here? It should be here somewhere, right? Market signals, mempool. Can you see hash rate anywhere? Miners revenue. Here we go. Hash rate. Right. So when it started, and if we go on here on the all-time graph, right? So it's like this. But even if we zoomed in on this smaller little segments here, you would still see it just rocketing up, right? Because this is an exponential.
Yeah.
And so the cost to get enough hash rate to take over the network, not only do you need to have 51% of the current value, you need to outpace the growth of the network as well. So once you think about it in those terms, you're like, wow, that would be like you would have to be buying Bitcoin miners faster than every other person already is, which is at this insane rate, right? So it would be very, very hard to get that thing. But then once you did, let's say you spent, at this point it would be hundreds of millions or billions of dollars to acquire all that amount of hardware somehow as the exclusive provider in the world. You got it all set up. You switch the electricity on to start your things running, you would be burning money at an insane rate, right? You've not only spent so much money to get these, the amount of electricity it takes to run like an entire mining farm is massive, right? And electricity isn't free. So all of a sudden you're in the position where your options are either mine Bitcoin, in which case I would be making a profit and paying off these expenses that I've incurred, or try and attack the network, in which case I'm paid for the hardware, I'm paying to run it, and I'm not making the money that I could make mining Bitcoins. Like this is this is really just not an economically feasible thing. And so let's say even if the US government decided, look, we absolutely fucking have to do this, and we're going to burn any amount of money to just like go at it. Well, where are they going to get that money? Again, it sort of comes back to tax or inflation, right? And if they're going to sustain an attack, because as soon as you switch your miners off, the Bitcoin network just switches back on. It just goes back to what it was doing, right? You can only hold it hostile so long as you're willing to keep burning your own money, setting it on fire to retain control of the network. And like, it just doesn't make sense, right? So eventually if you're going to keep running these costs, the US government, well, they either have to keep raising taxes on the US citizens or they have to print more money. And if they print more money, that just makes the situation worse for them because it devalues the US dollar against Bitcoin and signals to everyone, why do I have these worthless US dollars? I should get Bitcoin instead.
What are these green rectangles doing for me?
Exactly. What have you done for me lately, US dollar? Nothing but devalue, basically. So,
What do you know what that little dip around 2019 is?
this here, good question. I don't know. It does tend to, go up and down a little bit, as we can see here, because of, well, like for instance, maybe this was a certain point where a lot of the miners got switched onto Bitcoin Cash. I don't know. I feel like that was more in this sort of era, but I don't know. Maybe there was a surge in Bitcoin Cash, so all the miners started switching over to that. I don't know.
So this is a graph of mining, basically.
This is how much mining is going on, how much mining is going on, and so that's increased over time. It increases exponentially, not only because with more time people figure out how to make more miners, but they also improve the quality of them, right? Where they invented better and better computer chips that were specifically designed for Bitcoin mining. So that's also contributing to the growth. So that's where the government would have a hard time because they have to be on the cutting edge of this technology, which is always improving, as well as outpacing the whole network and everything I said before.
Governments being on the cutting edge of technology. Okay, yeah, this is completely safe.
That's right, exactly. I'm not super worried about. I mean, Bitcoin's been around for 12 years, and the government regulation is still. What are we going to do about it? Well, by the time. And again, it sort of all ties into this huge meta narrative again about the split between Bitcoin Cash and Bitcoin, right? Is that the Bitcoin Cash philosophy was the more users we have, the less regulation will be a problem because it'll just be a thing in society and it will be obvious that it's not a huge threat or a problem, and B, it will cause a bigger outcry if you wanted to get rid of it or screw it around somehow. Whereas the Bitcoin core philosophy, I to be honest, I don't know what their approach to that was. It was maybe like, I don't know. I don't figure how they think if we have some small percentage of the population, they can just get regulated and be a big problem. I don't know. You'd have to ask somebody who supported that more, I think.
Oh, there we go.
Oh, yeah, shit. He distracting you again. It is. It is mesmerizing, though. And I did, when that transaction street, I only saw that a couple months ago, but before that, back in the day, they used to have just what we were looking at here on blockchain. They had they've changed it now, but they used to have the transaction feed scrolling in with these little block buttons, and it was super mesmerizing in that way.
So
I can't find
basically, what the miners are doing is they're spending their computational power to process the transactions, and then getting a tiny bit of Bitcoin or a tiny bit of crypto as a reward for spending their computer's power.
Yeah, so it's essentially it comes from this idea of it's called proof of work, but it's basically like this sort of sunk cost kind of idea, right? Where the Bitcoin miners, actually it doesn't cost very much of this electricity or this processing powers to actually check the transactions. That takes virtually no time at all, right? That's why when I send you a transaction, your phone doesn't overheat figuring out that I've sent you one transaction. Like, that's not the difficult part. The part that they're all churning away on is the proof of work, which is basically like I'll get into that in more detail, but a lot of the white papers is sort of on that sort of topic, where it's about the algorithm, so that you can't cheat. There's no way to fake it. That the only way you could possibly have got to these certain verification of transactions was that you spent a lot of computing power. So there's no way to fake it, right? So if you were putting in putting in blocks to try and get that reward, you had to have spent the electricity. There's no other way. And so that means you can't have people frauding the network, or like we were talking before about those attacks, the government has to spend the electricity. There's no way you can be like, oh yeah, we'll just patch it or change it around or something, and we'll just be doing our own attack. Like, they're going to be spending that money if they want to be
So
involved.
yeah, that's quite exciting because it makes it like directly. Because I remember as a child, you look at coins and you're like, oh, this is 1p. That must be 1 pence worth of copper.
Yeah.
Or you look
Originally it
at
was, right? Like a silver dollar. Like the reason it's called a dollar is because
yeah,
it was a certain weight of silver and stuff like that. Yeah.
yeah. This is oh, it feels like such an elegant fix to like the last 50 plus years of I don't know societal exploitation. I'm feeling like such a hippie, like
You're through
a
the
techno
looking
hippie
glass,
right
mate.
now.
You are. Exactly.
Yeah,
You're a cyberpunk. What's it called? A cypherpunk. You're a cypherpunk now, mate. That's it. Yeah, it
I
really.
need to spike my hair and dye it pink.
Yeah, well, I think a lot.
Get-
I doubt Satoshi Nakamoto had the, had the steampunk aesthetic, but I'm sure, sure it could have rolled out that way. Maybe a good cosplay of Satoshi would be like some kind of, electronic version of that with like the Bitcoin logo, in scratched up like writing on the side. So that would be a sick Halloween costume, but.
Yeah, and that would be kind of like that would be good for fostering the community art kind of thing.
Yeah, yeah, exactly. And I mean, and this why like you say, I agree with you that it is sort of a very elegant solution. Okay, the white paper is a little bit complicated, but a lot of the, all the pieces slot together in terms of the economic incentive, in terms of the technology, in terms of how the mining works, how it's self-sustaining, how the miners get rewarded, how the transactions are verified, like how it grows from nothing to something. Like all these things do stack up together, and that's why it's such a big contentious point of what is the real Bitcoin. Because to me, at least in the Bitcoin Cash, like what I said in that first episode, which was basically Satoshi got it right, according to me and according to a lot of people, and that I mean according to people on both sides, right? They just disagree as to what was sort of meant in that original design, but the idea that which is honestly it is one of the most staggering things in you couldn't script it better, that this thing which was previously thought impossible was invented for the first time, worked flawlessly, and the creator anonymously just vanished without the government ever figuring out and being able to make an example out of them. And it's beyond
Yeah,
belief. It's like the craziest sci-fi movie. Somebody's going to make a movie about it at some point. There's already been some sort of documentaries and stuff, but somebody's got to make at some point some kind of Matrix type movie with Satoshi dodging the
it
government or
would be
something.
it would be so much more kind of valuable than having a movie about how crappy Facebook got made.
Yeah, yeah, exactly. Yeah, yeah. It's way sweeter than that. It's not like some dorm room college thing. It's like instead it was like pseudonymous founder, made all this. Now the world's first trillionaire, right? I think that was. I mean, they say like Elon Musk is like the richest guy in the world, right? But he's not. If Satoshi ever cropped up, he's got 1 million Bitcoin. He's like way richer than Elon Musk, right? So
Of course, he's got squillions of bitcoins. Does he have like a full million?
that's what they
God,
think.
it's just
They did. There's a really good article. I'm sure you can look it up. But they did. Basically, they've done research into, the patterns in the early days of how the coins were mined and all that sort of stuff. And there is, in theory, it's believed that there's basically 1 million of the early days of Bitcoin which haven't moved, right? And you can see that because it's on the blockchain, right? So if Satoshi ever moves any of those coins, the whole world will go into panic, or I don't know what. But it seems like whether willingly or not, Satoshi had that million and thought, you know what, let's let it rest. Let's just chill on that one.
he just breaks off a fraction of a bitcoin every now and then to pay for his electricity, and he just sits in his room playing the newest COD, like not.
Maybe. I mean, people have different theories, right? Like, I think it's probably quite likely that Satoshi is dead. That, I maybe not even to the extent of just assassinated by the government or anything. Although that's one
just
version.
just
But
organically.
just sort of happened. And I mean, a lot of people think that the creator of that Satoshi was this guy called Hal Finney, who was the second person ever after Satoshi to ever have Bitcoin. Because when it was first released and everything, this guy Hal Finney, he came on, he found out about it and everything. He talked to Satoshi. He said, "Look, send me some Bitcoin," and they did. They did that, right? So this first guy, Hal Finney, and he later died of, I think he had ALS, but it was like in 2014 or 2015, he died. And some people think, okay, he invented Satoshi as this fake, alter ego, and then obviously he sent something to himself and said, "I'm Hal Finney and I'm the second person," so that he could, play both sides of the coin. So some people think it was him, and he's gone now.
That sounds feasible. It's definitely not this Craig Wright chap.
Yeah, I mean, there's that's another theory. Is obviously he thinks he is, and some people think he is. But a theory that I'm more sort of inclined to is, at least when he announced it and everything like that, was that he worked with another guy who was sort of, potentially could have been Satoshi, who had sort of a lot of the right criteria and stuff, who died in, I think, 2013. And it's sort of, to me, it's maybe feasible that guy could have been Satoshi, and then Craig sort of knew him or was a bit, at the periphery somehow. And so then whatever evidence he has of, I did this in the early days, or I had all this Bitcoin, which I had saved up, or from way early, or like whatever, that it was because, he was mates with the guy who'd invented it and sort of doesn't want to acknowledge it, or something like that. I don't know.
He knows that he's dead and can therefore isn't going to have someone saying, "No, I'm Spartacus."
Yeah, that's right. Although I think it was, it's a bold move to be calling yourself Satoshi, because anybody could just pop out of the woodwork and whack you for any reason.
Well, yeah, if he's got 1 million Bitcoins, surely, I don't know, that's a lot of money to have in effectively gold or commodity, or hidden under your bed with just a password that you could be. Yeah, I can't see that going well for him.
Yeah, that's right. And I mean, well, Satoshi's anonymous, so it's all good. But yeah, good luck to Craig Wright with whoever goes investigating, his password folder or whatever.
Yeah,
it's just pretty
the money wouldn't even be traceable. That's the perfect crime.
Exactly. But it seems like Satoshi, the actual Satoshi was smart enough to see all this coming, and so, bet it was on the VPNs and everything. So, yeah, it didn't really work out that way. All right, man. I mean, we've been going for 2 hours. Like, I'm happy to keep talking. Do you have any more questions, or we can sort of wrap it up whatever you want?
I mean, the one other thing that I wanted to ask is what the Mt. Gox scandal was, but
yeah, well, that might. I don't think there's time separate. For that. It might have to be a separate episode. Like, you might you could come back. We could do another episode at some stage and just dig into the history of all that. But that was just a scandal and a half, and it did. I mean, the one thing I probably want to say about it, without going into all the details, is that it was responsible for so much of the early, growth and transactions was going on with it. And when it blew up, it was a scam, right? Mark Carpelli, who was the CEO of Mt. Gox, he vanished, and everybody was, "What did you do with that Bitcoins?" and all this sort of stuff. And that's another reason why Bitcoin's early image struggled, was because even though Bitcoin itself is not a scam, or cryptocurrency itself is not a scam, it's also a perfect vehicle for running scams, right? With people making fake exchanges, and because it's irreversible, right? Once you send it, you can't get it back, and all this kind of stuff. So especially before, as the education was just lower, not only in the total population, but even in the Bitcoin community, people were still, this was still a new thing. Obviously, there was still scams and people running off with Bitcoins and this and that. And so that's why, even though it did go through those hype cycles and grow, it still made sense that people were like, this is a scam, because when you read an article, you don't even know what a Bitcoin is. You feel like a Bitcoin exchange goes bust, you're not necessarily going to understand that. Look, if a bank goes down, that doesn't necessarily mean the whole USD is not a thing. Just like if a Bitcoin exchange collapses, that doesn't mean that Bitcoin itself there's any problem with it. In fact, that's Bitcoin working as intended, was that once somebody had it, it was pretty hard to get it back off them. But it's hard to see that from the outside. But yeah, maybe we can do that as a separate episode or something. All right, cool. Well, yeah. Yeah, well, I'm sure you'll come up with some more questions. We can definitely do another episode. It's been really good. I think yeah, I think people will enjoy this, especially if they're, you know, I think with the GME and everything. Like even my brother was mentioning to me, oh yeah, I'm getting into cryptocurrency. You know, maybe that kind of you know, crowd of people would be a good episode for them too. I think as well. Yeah. So do you want to shout out anything just before we leave it there? You
Um,
know,
no,
whatever you want.
I don't really have anyone I want to say. Shout out to all my friends, everyone I care about.
Yeah.
You know who you are and who
Yeah.
you aren't.
All right, cool. Well, I think we'll leave it there then. Until next time.